So welcome everybody. Thanks again for joining. I know it's Friday afternoon, so happy Friday, everybody. Hopefully you got some nice plans for the weekend. But as Luke mentioned, we're going to talk a little bit about our Cigna Flexible Choice Cancer, Heart Attack, and Stroke policy. So this policy is insured by Loyal American Life Insurance Company, and when we take a look at it, we'll be looking at it from a national perspective. So keep in mind that state specifics, can apply. So always refer to your state specific forms and materials for those, those details there. But I always like to start these sessions off with just a reminder about our mission here at Cigna, because at Cigna, our mission is to improve the health, well-being, and peace of mind of those we serve by making healthcare simple, affordable, and predictable. And we believe that our customers deserve to live better lives, and we help them to do this by focusing on healthcare, not just on sick care, because if customers stay healthier, then they can get much more out of life each and every day. And so we utilize this mission to, help us with our products out there in the marketplace. And so this is one way that you as an agent can go out there when you're talking to customers, leverage our mission, right? Help differentiate Cigna out there in the marketplace. And that can also help differentiate yourselves as well. So what we're going to do first is just take a quick little overview of the cancer and heart attack and stroke policies, and then we'll dive deeper into the product there itself. So just as an overview here, the Flexible Choice Cancer and Heart Attack and Stroke Plan, it's going to be available for issue ages 18 to 99. It is guaranteed renewable for life, and it comes in individual, couple, single parent, and family coverage options. Those are all available for you. Now, in most states, the lump sum benefit amounts are going to be available in $1,000 increments between $5,000 to $75,000, although that can vary in some states, so just keep that in mind. Now, we use simplified issue underwriting, so that means just simple yes and no questions associated to the policy that's being enacted. The policies are issue age rated, and they're also unisex and uni-tobacco. So that means it doesn't matter the gender or the tobacco usage, that's not going to affect the rate there for you. And then there are a number of riders that are available depending on your state. And so that Flexible Choice Cancer, Heart Attack, and Stroke Plan, right, you can really build it out to cover a variety of conditions based on, what you find out is most important to your customer. So it can really go beyond just that lump sum for cancer and heart attack and stroke, as you guys will see as we go through today's session. So this is just a nice product availability map for everybody. If you take a look, all the dark blue states there, that's where we have what we call our Flexible Choice 2.0. And so the Flexible Choice 2.0 states, those are the states that have all of our riders. However, keep in mind, riders are approved by the Department of Insurance, so there is some variation from state to state. The green states that you see there, those are our states that have the 1.0, so they have a little bit different selection of the riders, and we'll point those out as we go through today's session. And then, of course, you can see Wyoming there in the light blue, and that's in the light blue because in Wyoming, we only have the heart attack and stroke policy there. So there's not the cancer portion of the policy available in Wyoming. So as you can see, though, a lot of opportunity based on the markets that you're servicing to talk to your customers about the cancer, heart attack, and stroke policy. Another great resource for you guys to leverage too, to help get a better understanding of what your state covers as far as the base policy with all the riders and things like that, is through what we call the product availability chart. And so that is actually available on our producer portal. We just launched the new producer portal. So when you go in there on the dashboard on the left-hand side, just go to the resource center and you can launch right into that product availability chart. There's a nice key at the bottom. So anything that's abbreviated or, things that you might not be sure what it's telling you, just look down at the bottom of that key. The other thing to keep in mind with that product availability chart is that we always recommend, instead of downloading it, actually bookmark the link, because we update the product availability chart on a regular basis. Because anytime we launch a new product, or maybe there's a MedSup launch for a new charter, things of that nature, we're going to update that product availability chart. So by utilizing the link, you'll always have the most up-to-date version of that to help you out as a great resource. So let's go ahead and dive into the product here then and talk more about how this works for your customers. So the flexible choice cancer, heart attack, and stroke policy actually has two separate base policies that your customer can choose from. So they can go with the lump sum cancer as the base policy or the lump sum heart attack and stroke as the base policy. Now, each base policy is going to be available as a rider that can be added to the other one. So if your customer chose to have the flexible choice cancer as the base policy, they could add the rider for the flexible choice heart attack and stroke. So that way they can be covered for both if they choose to. Now, there are some riders, though, that are available based on what you pick for the base policy for your customer. And we'll kind of point those out as we go through today's session as well. So even though the customer might want to get covered for both of them, based on their overall needs, one or the other could be more important as the base policy because it'll unlock some of those more specific riders to either the cancer or the heart attack and stroke there. So you might be wondering that how do these work? So this is going to be a lump sum policy for cancer, right? That's going to pay out 100% of the selected benefit amount for the diagnosis of either cancer or carcinoma in situ, which is a non-invasive, right? And that's really a great policy because other policies that exist within the industry, they don't pay 100% for that benefit for carcinoma in situ. The other great benefit of this policy is that spouses and children that are covered by the policy are actually covered at the full lump sum benefit amount as the primary insured. And then with the heart attack and stroke as a lump policy, there are actually a number of different benefit triggers that are part of this, either as the base policy or if you choose to put it on as a rider. So it pays 100% for the selected lump sum for heart attack, heart transplant, and stroke. And then there's also a 25% benefit that's available for coronary artery bypass surgery, aortic surgery, and heart valve replacement and repair. And then a 10% benefit that's available for angioplasty and stent. Now, keep in mind that the policy is going to pay 100% of the selected, lump sum amount, right? So if your customer were to have, a stent placed, right, that pays them 10%. That means they have 90% remaining. So when they have that heart attack, if they did, right, it would pay that remaining 90%, paying out the full 100% of the policy there, okay? And so those are the two base policies that will, get you started with the plan. And then, like I mentioned, there are going to be additional riders that are available. Obviously, we already talked about the lump sum cancer, lump sum heart attack and stroke. Base policy could also be added as a rider. But then you also have, if you look over on the left-hand side for our 1.0 and our 2.0 states, you also have the cancer reoccurrence benefit rider or the heart attack and stroke restoration benefit rider. There is a hospital indemnity benefit rider, an intensive care unit indemnity benefit rider. There's also then a combination of those two together, hospital and intensive care. And then there's a return of premium rider. So in all of those 1.0 and the 2.0 states, you're going to see those riders. But then when you go to those additional 2.0 states, remember those dark blue states, right? That's where you're also going to see some additional riders available. So there is a benefit building cancer rider. There's also a benefit building for the heart attack and stroke as a rider. There's radiation and chemotherapy, the specified disease or critical illness rider, and an accident indemnity rider. And again, we're going to walk through and talk about each one of these riders here today. Okay, so again, you can really build this policy out to best meet your customer specific needs. It's not about trying to add all of these riders, right? It's about what's most important to your customer and then attaching those that make the most sense and building it out that way. So just keep that in mind as we go through. So we're going to go ahead and start off with the reoccurrence and restoration rider. So this rider has two separate names, just depending on what you pick as the base policy. So on the cancer base policy, that's where you're going to have cancer reoccurrence benefit rider. When you go with the heart attack and stroke, it becomes the restoration rider. But either way, the policy or this rider works the same way. And so when your customer goes a length of time without any, care or advice for the treatment there, right, it's going to build their lump sum back up. So if it's from 2 to 5 years, right, then it's going to build back up to 25%. From 5 to 10 years, it's 75%. And then 10 years or more, it builds that lump sum policy back up to 100% there. So again, it makes it nice because it'll keep that policy active, because we know that unfortunately, right, cancer can reoccur, and folks can have multiple heart attacks. And so this helps to, give them that peace of mind and that security, knowing if they've, recovered, as they continue to, age, their policy is going to build back up over time. Then we have those three, right? Hospital, intensive care unit, or the combination together. So the way that these riders work, with the hospital indemnity rider, the customer is going to select a benefit amount between $100 and $1,000. And then each day that that customer is confined to a hospital as a result of injury, sickness, or complications of pregnancy, they would receive that benefit. Then you have the intensive care unit indemnity benefit rider. Same benefit amount between $100 and $1,000 per day based on whatever that customer selected. So when they're confined to the intensive care unit as an inpatient, they're going to receive that as well. Or you can combine those two together. So when it's combined together, you have the hospital indemnity benefit, which is going to pay $100 to $1,000, depending on what the customer picked, each day that your customer is confined to the hospital. And then it would be double that amount if they're confined to the ICU as an inpatient. Now, one of the important things to note about these riders here is that the benefit amount is going to reduce by 50% once your customer reaches the age of 65. So definitely keep that in mind if you're talking about any of these three riders with your customers. And then, of course, we have a return of premium rider. This is a very popular rider because it returns 100% of the total premiums paid for the policy and the riders, minus any claims that the customer has been paid. So should the customer pass away while the policy and the rider is in effect, that money is then returned to their beneficiary. So this can really be a great rider because it protects you against that diagnosis or that critical event happening, but it also protects you if it doesn't happen, right? Those premiums will get paid back out to that beneficiary upon the death of the policy holder there. And then, of course, we have the benefit building rider. So this is available either on the lump sum cancer or on the heart attack and stroke based policy there. The way that this benefit building rider works is that your customer can select either $500 or $1,000. And so each year on the policy anniversary date, that amount, either the 500 or the 1,000, is then added to the base policy, provided that they have not had a qualifying health event. So this means that their benefit is going to continue to build over time, and it can build for up to 35 years. So this, again, can be a really great policy for your customers, because if they purchase it today and they're younger, right, and they're maybe not as high of a risk, right? We all know that prices go up over time. This is then going to build that lump sum up for them, so that way that policy is even more valuable in the future if they need to, leverage it upon that diagnosis of that critical condition that they're being covered for. Now, with the radiation and chemotherapy benefit rider, this one is going to be one that is available only if you're adding that lump sum cancer as your base policy. And so the way that the radiation and chemotherapy rider works is that this is going to then pay benefits as treatments are received, right? We all know, or maybe you know somebody that has gone through cancer treatments, and that can take a long time. It could be many months or even potentially longer than a year. So that lump sum money that they get from that base policy is really great, right, when they get that right away. But over the course of the treatment, they might need some additional support there. And so that's where something like the radiation and chemotherapy benefit, comes into play, because this is going to make sure that those additional benefits are still coming in the home as they're going through their treatment for radiation and chemotherapy. So this rider is available on 3 different levels, where there's a prime, an advantage, and a supreme. Now, the same benefits are covered under all 3 levels, but the benefits payable is going to increase as you step up from the prime to that supreme package. Now, you can see some of the benefits here for immunotherapy. There's injected chemotherapy, You've got non-hormonal oral chemotherapy. There's hormonal oral chemotherapy, anti-nausea drugs, radiation, and experimental treatment for cancer. You'll also notice, if you look over there on the right, you can see the different payout amounts and see how they increase for something like hormonal oral chemotherapy, $300 a month in the prime versus $700 a month in that supreme. The other important thing to note here too, though, is the frequency. Some of them are going to pay out on a monthly, a weekly, or you can see that experimental treatment for cancer is paying out on a daily. So just keep that in mind. The other thing I'll point out there too with the experimental treatment, you'll notice how it says it must be NCI approved. So that's the National Cancer Institute. So it does need to be an approved experimental treatment to receive those payouts. And then we just have a couple more riders here, There's a specified disease critical illness rider that comes with this that you could add on for a customer. This can really be a great rider as well because it allows you to cover a larger, variety of conditions there. Now, depending on the state, it can cover ALS, coma, end-stage renal failure, major organ transplant, multiple sclerosis, paralysis, Alzheimer's, dementia, loss of sight, loss of hearing, there's loss of speech, and severe burns. Now, please note that all of the Alzheimer's dementia will pay out at a 50% benefit. All of the rest of those covered conditions will pay 100% of the benefit. Now, this is a lump sum rider, and so your customer can choose between $5,000 to $50,000 worth of the lump sum. However, the amount that they select cannot exceed the lump sum amount in their base policy. So if they were to select, $30,000 for that lump sum heart attack and stroke for the base policy, the maximum benefit they could select for the specified disease rider would be $30,000. Additionally, too, the issue age for this rider is going to be 18 to 74, but this rider is guaranteed renewable for life. We also then have an accident fixed indemnity rider. And so this will come in 3 different levels. You've got that prime, advantage, and supreme. All 3 of those levels are going to cover the same schedule. So they have the same services for which they pay benefits, but those benefit amounts are going to increase as you step up to that supreme level. Now, the accident fixed indemnity rider is going to pay in addition to any other coverage that your customer may have. It's available for issue ages 18 to 74, and this rider is guaranteed renewable to age 80. It covers a wide range of treatments and services, not just the ones that you see here on the screen. So make sure you check out your state-specific forms and materials for the full list. But it's going to cover things like dislocations, fractures, concussions, emergency room visits, urgent care, x-rays, ambulance, and also benefits for accidental death and dismemberment there. So as you can see with all of these different riders, you can really provide, good coverage for whatever that customer is, looking to, get that sense of security. If they have that critical event or that diagnosis happen, they have that additional income, coming into the home. So that way they can really focus on what's most important, and that's their overall recovery there. So just to give you a snapshot of, cost structure there. This is Kevin. So Kevin is 42, and he was looking for the cancer-based policy at a $20,000 benefit amount. And he went ahead and added the cancer building benefit rider at $1,000 and the return of premium rider. So you can see the base policy here for him is about $19, just under $5 for the benefit building rider, and just under $6 there for that return of premium. So altogether, looking at just about $1 a day for him to be, covered, and to have a policy that is going to build up over time. And if he doesn't end up getting that diagnosis, his beneficiary would receive those premiums back through that return of premium rider. So a lot of value and very affordable out there. But keep in mind, these rates are for illustration purposes only, They are going to vary, depending on where you're at within the nation and the market that you support out there. So always utilize your tools to help get the right, quotes there for your customers. And then finally here, just wanted to touch base a little bit on that underwriting process, I mentioned earlier that it's simplified issues, so just simple yes and no questions. The nice thing too is that we're only going to ask the questions that are relevant to the specific policies that are being applied for. So for example, if a customer selects the lump sum cancer as the base policy, we're not going to be asking them the heart attack and stroke questions or vice versa. And then of course, depending on the riders that they add, right, then those riders would have different specific questions associated with those, right, to make it easy for you to build out that policy for your customer. The one nice thing here too is that accident indemnity rider, right, that doesn't have any underwriting. So that's always a really good rider that can be added for customers based on how they would qualify for the services there.